Welcome, everyone. Welcome to the Hurley Investments Trade Findings and Adjustments for Thursday the 8th. A lot of people have asked me about, we'll say, lots of questions came in last Monday and Tuesday in regards to how we are making more up on the way down than the stock is losing. And you'll find those at www.myhurleyinvestment.com. We've got a bunch of recordings there for you guys to go to on the way down. Perfect. And I've got a link here to option trading strategies, understanding the position of delta. But we do it can be done a couple different ways. And Jeff and Mary, I believe you guys come from the safe option strategies group of doing things. And I do things a little bit different than Jeffrey. But I will give Jeffrey the credit that he's taught me those things I need to know to manage money out there in the market. But the simple thing is, well, I'm just going to put it into simple English. Stocks lose penny for penny on the way down. So a $1 drop on 100 shares of stock loses $100. It's that simple. Protection on stock ownership is Lance, Jeff, Mary. I know you three are the talkative ones. Bill, nice to have you with us. Boy, I got a Bill and a William today. That's interesting. Heather, nice to have you with us. Anyone can answer. What is protection on stock ownership? What option can you use that is truly protection on stock ownership? William, that is not correct. A short call is not stock ownership protection. A short call gives you a 1 to 2 to 3% cushion on the way down, but you still could lose 97% or more of the value of the stock. So I am not going to call that protection. Mary and Jeff, bingo, 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 bango, wongo. Protection of stock ownership is the long put. And the long put, very simple. It equals the right to sell your stock at a certain price for a certain period of time. Great job, Jeff. Great job, Mary. That's exactly what it is. Now, we have a problem. Options have deltas. And I've got a really good article here of all the information that you need on deltas, understanding positions, deltas, what they are, strikes for deltas. I mean, plenty of information in here for you guys. But the short answer is at the money, slightly out of the money, or slightly in the money has a delta around 0.5, which means you make up half of the downward movement. So, question to you guys. If you think the stock's going to go down and one put contract makes up half of the downward movement, how many put contracts do you have to make up all the downward movement? No problem, Jeff. I can do that. 2 per shares. Perfect. 2 contracts. Excellent. Correct. If you want to make up, and I'm going to put this one in here, in theory. Boy, that is awfully spelled. In theory, you need twice as many contracts. Now, the problem is if you're wrong, you lose as much. So here's the thought process. The thought process the last week was 1.5 contracts per each share of stock. We added protection for earnings before the market collapse. So those contracts gain more value in increased volatility. And for those of you that maybe, Jeff, I don't think I have money for you. Mary, you could look at your account. William, you could look in your account. Heather, you can look in your account. What we did is, one, we got a little lucky because we had protection in place. And on some of them, we had 1.5. And as stocks went down, those deltas go up. They're inverse. They are inverse. So let me put that in here too. So as stocks go down, the deltas go up in put protection. So just doing the math, for every dollar the stock lost, the volatility doubled. So the short answer, 0.5 turned into 0.75, and having 50% more protection means 0.75 times, where's my times at? Times itself plus 50% more protection gave us roughly 1.25 deltas, or making $1.25 on every dollar the stock lost. Why is that important? Let's just take a quick peek at a couple of our positions and why it was so important to us. Apple, we trade Apple, right? Gotta type it in right. How neat on Apple to be protected at 225 when it fell down to 196. If we do that math, $29 times 1.25, $29 down, we made up $36.25. That was how we made more money on Apple on the way down than Apple lost. I'm going to run this through one more time for a couple others because I know some of you are like, oh, Kevin, your stocks you picked got crushed. Here's another one that is a freaking amazing. We were smart enough to have Disney protected at 105s up here at 103. Went all the way down to 85.37. Let's do the math. 105 down to 85.37. I'm just going to choose 86 for numbers. $19 drop. We just took these off today. Times that 1.25. The last $19 that Disney has fallen, we've made up $23.07. This is how we're doing it. I'm going to go one more because this is an amazing one. People are like, Ford. Can't type today, guys. I'm sorry. I thought I could type better. Ford. 1450. We protected for earnings up here at 1450. It went down to 934. 1450, 934, 10, 11, 12, 13, 14. That's $5. I'm going to use $5 for pretty simple math. $5 times that 1.5 or 1.25, excuse me. This is how we made up $6.25 on a $5 drop for Ford. Okay, so here's the key. Past 2 weeks were break even. On some were even more profitable. Ford, oversold, right? Oversold here, big time. What do you do with $5 of profit or $5,000? Excuse me, I did that wrong. What do you do right now with $6,250 of profit on 1,000 shares? What do you do with that profit from those puts? Okay, Mary says save it. We thank the Lord. You go buy a car. That's hilarious, William. We're talking about investing here, so I want you guys to try one more time. If you're trying to make money in the stock market, if you want to turn, this is how you turn 250 grand into $1 million. Jeff, interesting comment. Said you roll those puts down, you capture that 625. But Jeff, here's where Jeffrey and I are a little bit different, right? Jeffrey and I always, well, Jeffrey thinks you always should have protection on. With all due respect, I disagree. If you always had protection on, your stock has to move at least 16% before you make anything in the year. Well, Kevin, Jeffrey has also told me you go to leaps. You don't pay anything for that protection. Agreed. But the problem is that the stocks go up, you can't make anything on your stocks. You can only make things on the protection. And when you're protecting a stock, historically, 2 down quarters, 1 huge up quarter, 1 flat quarter, you break even on your puts historically. So the thought process is, technically speaking, this is where you might not run puts for a little bit. It's oversold, so you let the stock run for a little bit. This is a prime position, technically speaking. If you believe in level 1 fundamentals, if you believe in level 1 technical analysis, fundamental analysis, emotional analysis, or sentimental analysis, this is the opportune time to let it run. We actually booked our profits closer to $9.70. So for 48 cents right now, we've let forward run. But something we did, which Jeff, you're the only one that said it here. William, I'm sure you're probably thinking it. With $6,200.50, not counting what we spent on the puts of 44 cents, $9.73. We took that $6,250, divided it by $9.73. At 642 shares, we actually picked up 600. We didn't do 42. We picked up 600 extra shares, 100% paid for with our puts. That 600 shares by 48 cents right now that we've let run, that has made us an exact amount of 600 times 4.8, $288. You know what's neat? At least I think it's neat. What if the stock gets back up to $14? At one point, with 1,000 shares, $14 was 1,000. Well, excuse me, it was $14,000. What happens if Ford gets back up to $14 a share? Now that we have these extra 600 shares, I don't know if Ford's going to get back up to 14. It might not get back up to 14 for a year. I'll be honest with you, it might not get back up there for a year. But if it gets back up to 14, that'll be worth $22,400. What was $14,000 a month ago has the opportunity to be up 60% higher because we added 60% more shares of stock, 100% paid for with puts. Those poor people that have money in funds that are being managed by typical stockbrokers, goes down, goes up. Over a year's period of time, you break even. By using options for protection, you have the chance to pick up a 60% return when everybody else is just breaking even. This is the power of protecting. This is what we've been able to do in people's accounts. And this is why when the whole market goes on sale, we don't start selling everything off. We're just cashing in profits right now to add more shares. This is what we do, and this is why we do it. Just to make sure that we can help out increasing share count, helping people grow their portfolios. It's a process. It's a process that we do to manage people's accounts. So in the last little while, even though some shares of stock have lost 30, 40%, our accounts haven't taken that same hit. We're just about ready to pick up more shares with these profits we've been booking. You'll notice in your accounts, your cash value has increased significantly. That's going to be to buy more shares down here at a low so that when they come up higher, we can sell high, buy low, that kind of mentality. Any questions about anything I'm trying to share with you guys today? I am going to post this. This is some really good information on understanding how we're making up more on the way down by understanding option strategies delta position. Please read through this. Jeff, I sent you a cell phone number. The easiest thing, Jeff, will be for you just to give me a quick call. I'm trying to give you a second to write down that number. Would you let me know when you have that taken care of so that I know that that we can have a quick talk when we're done here? Mary, any questions? Heather, any questions? William, any questions? Bill, any questions? Jeff or Jim, any questions? Jim, I know you came a little bit late. I will try to have Dave get this posted this afternoon so you can listen to it and enjoy it this evening. And Jim, I don't know if you know, but 2 days ago, Rich Mormon spent the night at the hospital with his dad, but things seem to be looking good. And it looks like his dad's making a pretty good recovery. So, I guess it was Monday night. Maybe it was 3 days ago. Monday night, Rich was in the hospital with his father through the whole night. So maybe a quick call out that way if you don't already know. But again, things seem to be getting better. Okay, guys, appreciate you being with me here today. Pleasure to have you here. Jeff, give me a quick call. And guys, have a wonderful day. Look forward to talking to you on Monday. We'll have a great webinar Monday evening on portfolio positions and what we've done to take advantage of this this wild drop we've had in our market here recently. All right, guys, talk to you later. Appreciate seeing you. See you Monday night. Have a good evening and have a good day. Bye-bye.